Speaking at the event, the Deputy Chief of Staff to the President, Ibrahim Adija, who represented Vice President Kashim Shatima, described the program as an economic strategy designed to cut transportation costs and improve the welfare of Nigerians. What if the future of finance wasn't just profitable, but also ethical, inclusive, and socially responsible? Hello and welcome to Islamic Finance Weekly. I am Rahma Say Muhammed. Let us recap some key developments and stories for May 2026. We commence with the story that the Central Bank of Nigeria has reaffirmed its commitment to strengthening Sharia governance, regulatory clarity, and risk management within Nigeria's non-interest financial services sector as part of efforts to sustain financial stability and public confidence. The commitment was reiterated during the second annual interactive session between the Financial Regulation Advisory Council of Experts and the Advisory Committees of Experts of Non-Interest Financial Institutions held on Thursday, May 7, 2026 at the CBN Auditorium. In a welcome address delivered on behalf of the Deputy Governor, Financial System Stability, Mr. Philip Ikeazo, the Director, Financial Policy and Regulation Department, Dr. Rita Ijeoma Sike, described the session as a strategic platform for deepening the credibility, resilience, and soundness of the non-interest financial services industry. Mr. Ikeazo noted that the engagement builds on the foundation laid during the inaugural session and reinforces the bank's strong commitment to sustaining a sound, credible, and resilient non-interest financial system anchored on robust governance, effective compliance, and prudent risk management. He emphasized that non-interest financial institutions continue to play an increasingly strategic role in Nigeria's financial system by providing ethical and Sharia-compliant alternatives to conventional finance while contributing meaningfully to financial inclusion, real sector financing, MSME development, and shared prosperity. The Deputy Governor, however, observed that as the industry grows in size, sophistication, and interconnectedness, it faces unique risks, particularly non-compliance risk, governance challenges, operational vulnerabilities, and emerging technological risks. He warned that such risks, if not properly managed, can undermine public confidence, financial stability, and the overall credibility of the non-interest finance ecosystem. He explained that the establishment of FRAS and the mandatory constitution of ACEs in every NIFI were designed to institutionalize an effective, harmonized, and resilient governance framework across the industry. He added that sustained interaction between FRAS and ACE remains central to ensuring that regulatory expectations are clearly understood and consistently applied. In his opening remarks, the Deputy Chairman of FRAS, Professor Bashir Ali Umar, stressed that the interactive session aimed to strengthen governance in the subsector and provide a platform for positive, constructive engagement among the CBN, FRAS, and the ACEs of NIFIs. He commended the CBN management for reviving the interactive session, which was first instituted in 2014. Lotus Bank has partnered with the Presidential Initiative on CNG and EV to support the federal government's push for cleaner, more affordable transportation through compressed natural gas and electric vehicles. According to a statement, the collaboration was announced during the launch of the Northern Corridor of the CNG and EV program recently held in Kano State. The government stated that the initiative aims to accelerate the adoption of cleaner and more sustainable mobility alternatives for expanding CNG and EV infrastructure nationwide. Speaking at the event, the Deputy Chief of Staff to the President, Ibrahim Adija, who represented Vice President Kashim Shatima, described the program as an economic strategy designed to cut transportation costs and improve the welfare of Nigerians. Transportation costs affect everything: food prices, manufacturing, logistics, and ultimately the lives of ordinary Nigerians. This initiative is not just an energy policy, it is an economic strategy for national growth, Hadija said. Under the partnership framework, Lotus Bank said it would support financing solutions across the CNG value chain, including integrated energy hubs, clean mobility asset acquisition, fleet conversion, and infrastructure financing for businesses and institutional players. The Managing Director, Chief Executive Officer of Lotus Bank, Dr. Isiaka Ajani Lawal, said the bank remained committed to supporting sustainable initiatives capable of delivering long-term economic and social impact. Now, on the global front, the Islamic Development Bank has raised $1 billion through a benchmark Sukuk issuance in the capital markets. They stated that after several weeks of closely monitoring the market, The transaction was executed in a constructive market backdrop, with positive headlines following the volatile market period witnessed since March. The US dollar-denominated Sukuk transaction marks the bank's first US dollar benchmark issuance this year, following the significant milestones achieved in 2025, which saw 3 successful public benchmark transactions across USD and Euro markets. According to a statement issued and made available to this day by its communication director, Ahmed Ghazali, the bank rated AAA by S&P, Moody's, and Fitch, all with stable outlook, priced 5-year trust certificates under its $25 billion trust certificate issuance program. The statement noted that the joint lead managers for the issuance were Bank of China, BMO Capital Markets, BNP Paribas, ICBC, JP Morgan Securities plc, KIB Invest, Nomura, Standard Chartered Bank, and Warburg Bank. The Islamic Development Bank has announced its group annual meetings for 2026, which will bring together governors, ministers, development leaders, financial experts, and partners to address shared development challenges, advance regional connectivity, and promote sustainable and inclusive growth across member countries. It is scheduled to hold from 16th to 19th June in Baku, Azerbaijan, will host a global platform for dialogue, cooperation, and partnership, reinforcing the importance of collective action in an increasingly interconnected world. 57 member countries will be participating with one agenda, Regional Agenda for Sustainable Prosperity. According to the chairman of the ISDB Group, His Excellency Dr. Mohammed Al-Jasser, the annual meeting will highlight a collective commitment to advancing cooperation, resilience, and sustainable growth across member countries. Islamic Finance Weekly will go on a break, and when we return, we'll bring you further updates. Welcome back. Here is the Fact Box segment. The global Islamic finance industry has surpassed $5 trillion in assets. The leading countries adopting and driving this growth are heavily concentrated in the Gulf Cooperation Council region and Southeast Asia. The top 3 are Saudi Arabia, Malaysia, and United Arab Emirates. Now to our next story. ICIEC and OEKB have signed a framework reinsurance agreement to strengthen export credit and investment risk coverage between Austria and ICIEC member states, signed in Astana during the 2026 spring meeting of the Bern Union, hosted by Kazakh Exports from 11 to 14 May 2026. The agreement establishes a strong platform for cooperation between ICIEC and OEKB, acting as agent of the Republic of Austria under the Export Guarantees Act. Under the agreement, ICIEC will provide facultative reinsurance on a case-by-case basis for OEKB-supported insurance facilities, helping expand capacity, enhance risk sharing, and support eligible trade and investment transactions involving Austrian exporters, lenders, and investors in ICIEC member states. The agreement reflects both institutions' shared commitment to mobilizing trade and investments, strengthening market confidence, and supporting transactions that contribute to sustainable economic development. This partnership further highlights the important role of reinsurance in mitigating risk, enabling private sector participation, and advancing economic connectivity across key markets. Sukuk issuance across Gulf Cooperation Council countries rose 13.1% in the first 4 months of 2026, driven by strong local currency borrowing in Saudi Arabia, even as regional conflicts cloud the outlook for the Islamic finance industry. In its latest report, Islamic Finance 2026-2027, Navigating Rough Waters, S&P Global Ratings said global Sukuk issuance rose 20% during the period, driven by activity in Malaysia, Turkey, and Indonesia. The figures highlight the growing importance of Gulf capital markets in the global Islamic finance industry, with Saudi Arabia continuing to drive Sukuk activity through local currency issuance. However, S&P said geopolitical tensions and the ongoing Middle East war are weighing on economic growth prospects across key Gulf markets and are expected to slow Islamic finance industry growth in 2026. We expect the growth of the global Islamic finance industry to slow in 2026 to about 5% to 10% as a result of the Middle East war, following the expansion of 10.2% in 2025, said Mohammed Damak, head of Islamic finance at S&P Global Ratings. S&P said the conflict has significantly affected the economic growth outlook in several core Islamic finance countries, reducing growth opportunities for banking systems and affecting debt capital market activity. The agency added that weaker economic growth prospects across most GCC countries would inevitably reduce growth opportunities for banks in the region, including Islamic lenders. The resolution of the Middle East war will determine whether or not this trend continues, as the GCC accounted for 45% of the global Sukuk issuance in Denmark added. S&P's base case scenario assumes the US and Iran will reach an agreement that eases the effective blockade of the Strait of Hormuz, allowing meaningful oil and petroleum product flows to resume by the end of May, although intermittent disruptions could continue. The agency said a gradual normalization of oil and gas supply, trade and transportation flows would be necessary for Islamic finance growth to recover in 2027. We round up with the story that the Financial Regulatory Authority has adopted new regulations governing Takaful operations in Egypt. Applicable to all companies licensed to operate in the sector, the new rules provide, among other things, for the introduction of 3 distinct operating models for the Takaful account, participants fund, Wakala, Mudaraba, and a hybrid model combining the 2 systems. The establishment of a comprehensive framework for insurance policies, defining the nature of the contractual relationship, mechanisms for distributing insurance surpluses, and Sharia-compliant investment methods, the creation of technical reserves aimed at strengthening the sector's financial stability, and the obligation for Takaful operators to establish an independent Sharia supervisory board composed of at least 3 members. Through this initiative, the FRA aims to revitalize the Takaful market and support its growth in line with the Unified Insurance Law enacted in 2024. And that is all on the news update today. And with that, I say, don't forget to keep updated to us on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching. And as always, I am Rahma Say Muhammed.